reduce debt servicing through instruments like debt restructuring mechanisms or limited amounts of debt standstill in certain areas, as Malaysia also did. Number 3, stabilize the local currency when it begins to collapse. What are the methods of stabilizing? We can talk to the experts. We can learn from other countries their lessons. Number 4, enable policy space so that we can still have some significant control over interest rate, monetary policy, and the expansion of government spending when there is a collapse of aggregate demand and when there is such a volatility in monetary indicators such as interest rates and the volume of credit that goes to the economy. Number 5, devise social policies in an emergency situation that may arise. And finally, trade policy. Because if trade begins to reduce or even collapse, as it has happened in many of our countries during financial crisis, I mean, I went through the Asian financial crisis, so we know when trade collapses, it's like your exports fall by 50% in 1 year. Okay? Can we rely on South-South trade or rely more on the domestic market if the external market is reduced, if commodity prices collapse, and so on? So you might say this is a kind of apocalypse situation, which I'm exaggerating, but what I'm telling you here is nothing compared to what the authors are telling us in their book. And this is what prompted me to write down these notes quickly, because I knew we are in a bad situation, but not an emergency situation. So my question actually I shouldn't be asking question, but the question to the 2 eminent speakers is, are we right to prepare for an emergency, or or is this too scary for us to start preparing for an emergency and we should just prepare for, well, bad days ahead, but not really in such a bad state that we have to look at it as an emergency? Thank you very much.
Thank you, Martin. We have heard our speakers telling us how G7 policies pose a serious threat to stability and sustainability on 3 fronts: economic sustainability, stability, climate, environmental, and political. And at the heart of all that appears to be the finance. There are vested interests in debt-driven expansions, vested interests in carbon-driven economic growth. And since the markets no longer protect the interests of the powerful, you cannot rely on them, and perhaps you build more military muscle. Now, I want to open the floor for questions on these. Please use the microphone, also indicate where you're from and who you are. Done. Please, sir.
Thank you, moderator. I would like to thank South Center for organizing this very enlightening session concerning what we have described as the revolution required the ticking bomb of the G7 model. I would like to thank the panelists for a very comprehensive exposure of the indicators, the trends as to how the financial status, the financial situation is taking us. And in fact, to the extent that granting us or giving us the fear, which probably is now being amplified by Martin. What has captivated my mind is this question of the bipolar system, the two key players who are interdependent but at the same time competitive. Connected with that is this question of the instrument of doing business or payment. That's money being controlled by only one person or one country. Now, what are we to do about this kind of situation? Can anyone really help us? Should we allow this kind of situation and we, the rest of us, out of so many countries we have in the world, to manipulate us the way they probably would, I would say, the way they want? Thank you.
Thank you. Please.
Thank you very much. I try to be understood enough in English. I'm not at all a person dealing with banking. I'm a simple doctor, medical doctor. But I would like to say what is remarkable, and I want to speak directly to Dr. Martin Koch. I know him for more than 20 years through People Health Movement. He had a talent already of pedagogue. And I'm so amazed that he's been able to keep that all the time he's been in Geneva. And it's a pleasure because everyone could read your brochure. Everyone was going, everyone was giving what he wrote. People understood. And I hope you will keep that in the South Center because you've done a marvelous work on that issue. And may I just also add something? What we are talking about with the bank, it seems to me going back when the EU wanted to give the price of banana in South America when they started to send their fruits. And we were ashamed to see such an idea of dealing from away from a rich country, telling them how much we would pay that. And may I ask a question? What we are feeling with WHO of the entrance of private business, more than business. And when I read into the corridor here, private business here, business for all, regulation for all, but where will be the revolution? Which kind of ethics we will have within the UN? What will be the destruction of the spirit of the UN, which has a lot of difficulty to fly? Thank you very much.
Thank you. Sir? Yes.
And yourself, the chairman, for such a thought-provoking, even fear-provoking session. The analysis that was made by the two authors and the panelists has focused mainly on the largest economies, probably the Western economies plus the emerging economies, namely China, India, and a few others that maybe represent more than 90% of the world economy. when you consider the geopolitics, how it plays out, you see that, for instance, on the African continent, which by 2030 will be up to 2 billion people, you have a far west of competing, I would say, proxy, warmongering, non-state actors, secret services, terrorist organizations, just to name a few, at the backdrop of lack of takeoff of the African economy as maybe one should say as a third engine of growth of the world economy. I could maybe recognize that somewhere in around the 70s, what I would call the second opium war on the China bloc has ended. But as this week we are remembering the death of Winnie Mandela, I don't know whether the second apartheid war on Africa has ended. I'm saying this on a personal basis because if you recall, the death toll in the frontline states leading to the liberation of Mandela in 1990 was a few millions, 1 million in Angola, 1 million in Mozambique. I could go on, but more recently, in the last 20 years, we have had those proxy wars that span from Sudan to the Great Lakes region, which have led maybe to somewhere between 8 to 12 million deaths. And some argue that these are wars on the control of key commodities. So, in your view, are we seeing, can you predict whether the African Far West will see an end vis-a-vis, in the near future, vis-a-vis the two-polar world? Or do you see it worsening? And what is going to be the impact of the ensuing demographic tipping point? Thank you.
Thank you. There's a journalist, the UN journalist.
My name is Ravi Kant. I'm a journalist. It's an excellent discussion in terms of a feast of ideas that it has thrown up. But I have just 2-3 simple questions. Namely, I've not read the revolution required, so I'm completely unaware of the kind of nuances and the details it contains. But what do you think? What would the authors think in terms of this particular process that has evolved since 2008 and the devastating impact it has had on the Greek people in terms of the kind of prescriptions that were forced on the Greek economy by the European Union? Would the authors reckon that the European Union has basically collapsed as a counterweight to the United States in setting up both financial and trade regulatory policies? And the second thing is, since 1971, with Nixon's moving away from the gold standard, the authors are rightly pointed about the emergence of Wall Street as a major center. In terms of several analysis, it has become a global minotaur. How would the future address this problem, in the sense that you have a minotaur which is day in and day out sucking out all the monies and creating bubbles and forcing new problems? So how would this be addressed in the coming days, if at all it will be addressed? Third, the Chinese question, namely this whole Chinese holdings of about 1.4 trillion or more, how will that be sort of decided in terms of the crisis that is unfolding on the trade front? Will that issue ever come to the upfront, namely if Chinese doing something on the external their reserves position, holdings in the American Treasury bills? Thank you.
Thank you. Okay, I'm going to give the floor first to speakers, then the panelists to answer these questions. Then I will abuse my privilege and make some remarks. Of course, the panelists and the speakers will be free to respond to anything that come out of that. So.
First, perhaps the two questions on our colleagues from Africa. I think when it comes to Africa, of course, we did not cover the problems of this continent in our book, but I just would like to draw your attention to the last slide. Reallocation of global public expenditure for the common good. This looks utopia, but I think when you read our manifesto, how to understand that we are in a world where in the management of expenditure, requests from the military industrial complex are immediately satisfied with billions and now trillions. And when it comes to the global warming threat, in 2009, it was agreed in Copenhagen that $100 billion of real public money should be transferred to the emerging and developing countries to help them contribute to the energy transition and to the global warming threat. So who can do this reallocation of resources at the global level? Of course, we are not naive. There are powerful interests which will oppose this reallocation. But I'm sure that, the French economist Tirole has published a book which is The Economy for the Common Good. Perhaps we can hope that at some stage the people will act in the direction of this simple reallocation of resources. And of course, this is not only global warming. We have only alluded to this, but the problem of water resources, pressure of water resources, starvation, epidemics are huge. So why the hell this cannot be addressed? I think that we finish with this idea that this might be utopia, of course, and naive thinking, but in fact, this is more of a categorical imperative in our view. When it comes to the questions on China, Greece, bubbles, I must say that these are, of course, a valid question. No one on China knows how they will manage their foreign exchange reserves going forward. I don't know the latest numbers on their holdings of US treasuries, but this is obviously an important question. We do not address the issues like the Greek situation in our book. But of course, you are right to raise the question. In a way, we did not look at the country within the Eurozone at country cases, but this is obviously an important question. And I think this question of bubbles, I think I can only say that it's the way the G7 countries have behaved while allowing bubble build-up, and then when the problems arise, trying to solve the problem with even more exuberance, even more speculative excesses. This is at the core of the problem, and this is why there is no other way than to have eventually this very prudent normalization of monetary policy to go out of this system of creating serial bubbles. And I think that this is one of the most important questions. So I don't know if you wish. I can also mention other comments which were made by in your hands.
If you could address them, including the ones raised by the panelists, then we can turn to them.
So I very much agree with everything Governor already said. As always, he asked the question. We are making the description of the international monetary system, the absence of a sound anchor to the system, but he asked what are the viable alternatives. Of course, in our book, we mentioned that if we want to go out of the Triffin dilemma, which is not having national currencies being the anchor of the system, there are two known candidates which we review in the book. There is gold, there is the SDR. And of course, these are all this was very, very well explained in the book published under Michel Cordessus a few years ago with Tommaso Padoa-Schioppa, and Governor Reddy was also part of these deliberations. So we have no, I would say, expectation that something will change in the short term on this. But what can be done is to run the current international monetary system in a way that is more prudent. I mean, we mentioned in the book that at the end of September 2016, the SDR rate, which is the interest rate of the G7 reserve currencies, was minus 0.05%. Can we imagine that this negative SDR interest rate, reflecting the monetary policies of the main G7 countries, was appropriate for having a global financial system which is resilient and which avoids imbalances. This is absolutely obvious that there is something wrong. And I must say, the IMF, its managing director, we quote this in the book, when ECB and Bank of Japan moved into negative nominal interest rates territory, they complimented these two central banks. I think that there is something to be done to have a more stable and more prudent international financial system, more resilient to shocks if we go out of what we have seen. An SDR interest rates at minus 0.0%. Who believes that this was a prudent management? I think this is the type of question we ask. And of course, we have no magic reform of the international monetary system at the moment. Perhaps I could mention Mr. Comfort gave a very good update on what's going on global regulation. It was extremely helpful. I would like to be clear because my intervention was extremely critical of some examples of regulatory capture. But the fact, and this was very well explained by Mr. Comfort, that what the Basel Committee has achieved with Basel III after the financial crisis was extremely important and a very good job. This has been done between 2009 and 2013. But now it was in the context of the aftermath of the great financial crisis. So it was a major breakthrough. But what we are seeing in the last few years is that the industry, the financial industry on both sides of the Atlantic have now regained prominence, and they have been able to water down little by little. So we give a number of examples, the leverage ratio, the zero risk weight for sovereigns. But the real thing is that the BIS, Basel III were extremely important and good reforms. But now the regulatory capture examples show that the pendulum has switched in the other direction, and the industry, there is probably not enough capital in the financial system. However, the financial industry believes that this is too much. And I think this is very important moment for the future of supervision. To give the last point on Mr. Comfort's comments is that when it comes to the zero risk weight for sovereigns, which is something which you cannot justify in a market economy, the credit risk is what it is, but it has no reasons to be zero. And one of the things which are being considered is that, as he said, there is some idea that to remove the sovereigns from the asset classes eligible to the internal rating-based approach, the model-based approach, and to move to the standardized approach. But what this would have as a consequence is that in the internal ratings-based approach, you have to have a meaningful differentiation of the risks. You cannot put a zero risk weight. Whereas if you go to the standardized approach, the G7 countries would have a zero risk weight. So I think there is a very important thing in the internal IRB approach. I think there is something here which is very important. So I should be brief. I fully agree with everything Mr. Kaur has said. He asked, should we prepare for emergencies? I think obviously the response is yes. I think that emerging markets have shown in the past decade that they have learned a lot in terms of preparation, and I think that they are probably better equipped today to withstand the next shock. But I agree with you. This is scary. This is scary. So I don't want to take too much of your time. Peter.
All right, I'll turn to the panelists. Go with it. Anything you want to add?
I'll just quickly, very briefly clarify. The International Monetary System.
Mike.
I'll quickly clarify. Okay? No. Thanks. On the International Monetary System, it is true that the only option available on the table is SDR. But essentially it's a fiat money, and when it's fiat money, there is need for sovereign or sovereign-like backing. A fiat money there is some sovereign-like backing. The experience with euro has shown, if it is even more than one sovereign, there is not enough of a backing. When there are multiple sovereigns backing euro, it doesn't survive the test. So that is the problem. Even if we introduce SDR, so in a way, therefore, unless we create some sort of a global government, which has some sort of an authority to back a global currency, and that agreement, so we have a choice now. There is a competition between one currency and another, or there should be a global government. So the international monetary system can be resolved only when, at a political level, there is an agreement for a global currency. And that is the real issue. Number two, Africa demography, I think that's an important issue. But I think by now the present phase is shift of real economic activity from West to Asia, but I think in another 20 years it will shift to Africa. And therefore I think that is an aspect on which there will be pressure from the bipolar world to dominate. So that's still a vaccine there. And at the moment, I think there should be a lot more political consciousness in that area. And the problem for the point that I raised, the problem for developing countries, most of the developing countries, is that when there are two, coming from a village, when there are two giants in a village fighting, but when the peasant challenges, they cooperate. And when there are two, so they cooperate, they collaborate to, if there is a joint effort by the rest of the people against them. So that's going to be a new dimension. And therefore, in a way, it will be weaker. The smaller developing countries will be weaker in this fight, rather than stronger to be able to choose one between the two. That is my fear, but it's open-ended. How to address the global financial system? My own prescription, which is more or less what Martin said, is that in goods, the developing countries will gain by globalization. In finance, we will lose by globalization. We have to strengthen the national capabilities to manage the globalization of finance. Finance can be regulated, has to be regulated nationally, and as long as we don't have an international regulation, the only way is roll back global finance and roll forward trade in goods. I think that is the only way I can mention. About China's forex reserve, I think it cuts both ways. When China is having a lot of US Treasury bills, in some ways US is at the mercy of China. But China also is at the mercy of USA. because if they start selling, the prices will fall. They can't sell in a bank. And secondly, if they start doing something else, there is US treasury bills and they can take any extraordinary action because it's sovereign liability. So I think it's a tricky situation. They are bound in some ways to manage even extrication from this mutual dependence. Thank you.
And
Well, yes. Payments systems during crises. I don't see some kind of global system being erected to deal with crises. I think that the consequences of crises will have to be dealt with through bilateral arrangements and regional arrangements. Martin pointed to one possibility on this front, maybe the Chiang Mai initiative. It was a spectacular initiative in Western Europe in the 1950s, the European Payments Union. All these things are worth studying. Dealing with the crisis will be difficult, I think, to put in place, so to speak, preemptive arrangements. But I do think that more attention could be given to what has been done in the past in crises, of which there have been many. On ethics, the problem with ethics, obviously ethics, the financial system depends on a certain level of confidence, which in turn depends on ethics, decent ethics. The ethics in a system, obviously not only the financial system, but also the business in general. As far as the financial system is concerned, probably the most important thing you can do is to check or bring under better control speculative activities. It isn't that difficult to identify purely speculative activities. You just have to have the determination to do it and the determination to face down the lobbies which will try and prevent you from doing it. On security, that is a big problem, and we're seeing that in the world economy, in such things as the problems with correspondent banking, is what you have now as a situation in which several banks are pulling out of their involvement in, for example, trade finance with developing countries which they feel are insecure. And this is now an issue for the Financial Stability Board, and so on and so forth. Much is being talked about. I'm not sure how much is actually being done, and I'm not sure how much can actually be done other than governments taking over certain functions or certain types of payments and financing. It's certainly worth focus and discussion, but I don't think at the moment we have a solution, given the fact that banks have their responsibility not to lose too much money. It seems to me unfortunate that this responsibility has resulted in some cases in their refusing to handle transfers which charitable organizations, private aid organizations and so on and so forth would like to make. On crisis in China, I don't feel that I have anything useful to say. On the effects of the Greek crisis on the European Union, I agree with other speakers that shouldn't be seen as an isolated incident. It seems to me the European Union at the moment is suffering from the fact that it's got the balance between the multilateral and the national wrong, in the sense that it is trying to put in place multilateral arrangements which go beyond national cultures, and in consequence Brussels is causing a kind of fight back from countries who feel Brussels is infringing on areas which should be national responsibilities. I don't know how you deal with this, because one of the problems is that Brussels is extremely reluctant to let go of anything let go of any powers which it's acquired in recent years. I do think that some kind of rethink about the distribution of national and multinational responsibilities needs to be carried out. I'm not sure how this will be done. I worry that if it isn't done, the European Union will suffer. I'm not quite sure what kind of European Union will emerge. I doubt that the European Union itself will completely fall apart, but it may become less functional, dysfunctional, more unpopular in various ways. That's all I have to say. Thank you.
Thank you. I will allow myself to make brief remarks on two issues. One is the monetary policy in G7, particularly US, and the other is international finance. I want to ask three questions in the monetary policy. Why are these policies? What's the impact? And what to do about it? Now, on the first question, all major economies suffer, including US, UK, Germany, Japan, and China, suffer from insufficient demand. I call it underconsumption. The reason is inequality. Share of wages have been going down in most of these countries, although there will be reversal in Germany. And wealth is heavily concentrated. The working population cannot afford goods and services they produce. And because of underconsumption, there is also underinvestment. And one solution is to look for exports to fill the gap. China, Japan, Germany, doing it varying degree from time to time. Another one is debt-driven booms in consumption and investment, particularly property investment. This is what UK and US has been doing. But many developing countries are doing it. Asian countries, Malaysia, Korea, they're even more indebted domestically, household sector, than the US. Governments unwilling to increase minimum wages, improve the conditions of labor, but they're willing to facilitate borrowing through credit cards and other things. That is a general thing, not only in the North, but also in the South. The system doesn't create decent jobs to pay decent wages, but the system creates debt. They even create debt for people who are unemployed, as we saw in the subprime crisis. And the banks comply. Why? Because they get bailout when the things go wrong. That's the first question. This is my understanding. Of course, there are other factors, but this is a key issue in why these policies. The second is what effect. I think the book has a lot to say on that. I also discuss in my book. First, it creates asset bubbles, credit bubbles, financial fragility. And the book looks at the North, but I think we have even more fragility in the South built up. We don't have a major fiscal debt problem, but we have a massive corporate buildup of dollar debt, particularly since 2008. And we know that at times of crisis, private debt becomes public debt. Second, as the book points out, boom bust cycles aggravate the problem by creating even more inequality in wealth and income, and therefore necessitating even bigger bubbles to overcome the crisis. I discussed this also quite independently in my book. And third, these bubbles distort resource allocation, support speculative activities, zombie firms, reduces potential growth. And there's a lot of evidence on it. I think BIS has written a lot of papers on that. And then all these boom-bust cycles actually aggravate the structural problems. And third, what to do it? How to remove the gap, demand gap, without creating either bubbles or trade conflicts. You cannot do it through deficit spending. Why? For the simple reason that Keynesian policies are for counter-cyclical problems. You run deficit at bad times, surplus at good times. They are not to deal with structural difficulties. You cannot keep running ever-growing deficits. I think we agree. I'm not a fiscal orthodox, but I think we can agree on that. But there's a role for public policy, labor market policies, corporate policies, encouraging more improvements for labor, rather than using the corporate money for the shareholders or buybacks, dividends, and so on. And since restoring the balance between labor and capital through the markets takes some time, greater attention can also be given to redistribution through the budget. I think progressive taxes could be very helpful, not only in financing additional spending, but also helping market-generated inequalities, particularly if combined with transfers to low-income groups in various areas, education, health, etc., etc. Now, what is worrying is that I think we could agree on most of these points, but these socially progressive and economically effective solutions have never been put on the agenda since 2008. Coming to the second issue, international finance, dollar dominance. We're doing some research in South Center on external balance sheets of emerging and advanced economies, and we should be getting it out very soon. In other words, whose hands are in whose pockets. We look at the gross assets and liabilities of G20 emerging economies, as well as the 4-5 major advanced economies, US, UK, Germany, and Japan. Now, return differentials between assets and liabilities, because you pay return on your liabilities and you get return on your assets. Return differentials, including capital losses and gains and losses and yields, are invariably negative for all emerging economies and invariably positive for all advanced economies we looked at it. And the biggest beneficiary is the United States. The United States has the highest return differentials between its assets and liabilities. And since emerging economies' assets are liabilities of advanced economies, we don't hold each other's assets. Since our liabilities are largely to advanced economies, this return differential generates a massive transfer of funds from the south to the north, which I estimate in the range of 2.5% of GDP of the emerging economies we study. Okay. Now, countries like China and Russia have positive net financial asset positions. Their assets exceed their liabilities. They are net creditors, in the terminology of the IMF. But their net income positions are invariably negative. China has a negative net investment income position. By contrast, US and UK have a negative net financial asset position. But because of large return differential between assets and liabilities, their net investment income position is positive. In particular, the external balance sheet of the United States that is providing low yielding but highly liquid debt assets to others, particularly to emerging economies, but not only to them. It includes also Japan, which holds large amounts of the dollar assets and therefore highly exposed to the dollar values. Against that, US acquires high yielding, long-term, less liquid assets, and the difference between the return between the two explains why the US is really free riding in the sense of exorbitant privilege. And now, I don't think we can solve this problem simply by adding more currencies to SDR, everything else being equal. I think this will require a complete overhaul of the international financial arrangement, including the discipline over capital flows, including the exchange rate policies, including disciplining countries like the US, which have predominantly massive influence on global conditions in its macroeconomic policies. Emerging economies, developing countries are disciplined when they go to the IMF. They are disciplined when they don't. They're disciplined by financial markets. But we don't have such a discipline on the major advanced economies, particularly the US. And it's interesting that we have a multilateral discipline, even though it is breaking down now in trade, investment, which is much less damaging when we have the trade shock than compared to the financial. And we have no multilateral discipline in the area of finance and money. And all the mechanisms that were tried during the Bretton Woods collapsed one after the other. So I think we need to pay attention to these factors when we talk about both domestic policies and international monetary system. And of course, if you need any thing to add to this, I'd be quite happy from either you or the panelists. But this is not just to provoke new debate, but to give some further reflection on the issues.
Very useful.
Anything? Okay, if there's nothing else, I thank everybody, the audience, the panelists. I think it was a great honor to have you here to make such an important presentation to our audience. And I also thank our participants, the non-Southampton participants, and the Concord and half the Southampton participants, Dr. Reddy, for their excellent intervention. Thank you very much.
I'm just amused because in my presentation I said, my friend Yilmaz is never tired of making this comment. I written this, I didn't read it out exactly.
Thank you very much.
Very good. Well done. Thank you.